This highly profitable strategy makes you highly profitable trader. This strategy is based on supply and demand. This trading the indicator aids you when to buy, sell, and take profit. It is no buy and sell in green sine wheels chant. You can't get with the trend. This is not a luck, it's a winning strategy. Finally, 5 years of experience taught me which strategy works. You can't trade with the fear and emotion.
Hey everybody, how's it going? Happy Friday. I just wanted to hop on here and do a quick trade update for you guys, or a trade recap, should I say. This is Australian dollar versus US dollar. I'm currently on the 5-minute time frame. Now, this is a trade that I shared my analysis on earlier this morning. It took a while to play out. As you can see, it started consolidating right near the take profit level. Well, technically the original analysis I sent to the analysis channel in the Discord, the take profit was much lower, somewhere around here. I ended up raising the take profit up a little bit more just to match the equal highs, or what would be equal highs if it got to this high right here. So as you can see, I was just like a fraction of a pip away, or maybe like 1 pip away, and then price just started consolidating for quite some time. Eventually hit the take profit and then continued to consolidate, and it's trickling downward now as we end the trading session for the day and the week as a whole. So let me just jump over to the 1 hour time frame. Okay, so first thing in the morning, I actually took a 1 hour loss on this pair. I was aiming to go short based on the fact that we had a lot of liquidity sitting above these highs. I figured price would purge the liquidity a little bit and then start trading lower. I figured supply would be respected because there was a lot going on within these wicks, right? Order blocks on lower time frames. So I was aiming to go short, and I ended up taking a very small loss. I deleted the parameters, so I don't even remember exactly where it was, to be honest. Because that's just part of my mindset. Just move on, like just forget about it, learn from it, forget about it, and then move on to the next one, right? And that's exactly what I did. So I was on the 5-minute time frame. This was short, like just very shortly after I took that 1 hour loss. And so because the supply zone that I had mapped out was not respected and demand took control, I switched my bias from short to long, and then just started paying closer attention to bullish order flow. And with that being said, there's obviously multiple breaks of structure, which shows that bullish order flow is healthy. Again, I was aiming for supply to take control and start pushing price down lower, but that just didn't happen, and that's okay. Like, that's why I keep my risk management very tight. The most I'll ever risk on a trade is 1%, and oftentimes I'm only risking like 0.5%. So it really doesn't bother me when I take a loss. So yeah, my initial bias was proven wrong. So of course, instead of revenge trading, chasing a short trade, I switched my bias to long and looked at the market from a different perspective. So only looking for buys. Now I started targeting this area here because we have strong bullish momentum that caused a break of structure, right? Very simple stuff. This is what's taught in the course. This is what's taught in the ebook, just very simple stuff, right? This is the order block or the refined demand level. Again, it doesn't matter if it's bearish or bullish, as I've said in previous videos. In this case, it's technically a bullish candle, like it's the gold color that I have on my chart here. But what matters is that it's the low momentum candle prior to momentum kicking in the market that actually broke the structure, right? So this was the point of origin, and that's why I use my fib tool to highlight it. As you can see, the 50% mark, the center line or the equilibrium of my fib tool is the exact same color as my bullish candles. I just like it that way. It looks good. It's appealing to me. I like that color. And that is the ideal entry point for me. That's why I highlight it in that color, and the other two are black. The top black line represents basically the earliest point that I would get in a trade, but the 50% is my ideal entry point. And then the bottom line is, my stop loss should be just below that, right? So it's just nice to have that tool there. It just shows you how to framework your parameters. And anyways, I set my entry. I had a buy limit order, and I set it for the equilibrium here, the 50% mark of that order block, or refined demand, whichever way you want to look at it. Excuse me. And I was actually away from my chart when this happened. If I was sitting at my chart, this huge bearish candle probably would have alarmed me a bit, to be honest, because it's such high momentum. I still would have trusted my analysis and kept the order there. I'm not saying I would have closed it or anything, but that definitely would have gotten my attention because it's a very high volume candle. But as soon as it hit this demand zone, and you can see how powerful these levels are, even with that high bearish momentum, as soon as we mitigate this zone, price just takes off from there, right? And within a very short amount of time, it was near my take profit level. Just barely away from it, and then it started messing around for a bit. But again, trusted my analysis and held the trade, and it eventually worked out. So let me drop down to the 1 minute time frame, because then I can explain the annotations I have here a little better. So here's where it gets a little more interesting. Let me delete this. Okay, so we're triggered into the trade. Now, when that trade was triggered, what did we do? We cleared the liquidity from the equal lows right here, okay? That's very important, okay? So price doesn't respect these double bottoms or triple bottoms. Every once in a while it does, but more often than not, it's treated as liquidity because there is resting stop loss orders below here from people trying to go long. So what does price do? This massive bearish leg right here, clearing out all of those stop losses, mitigating the actual point of interest, and then momentum really kicks in from there, and buyers take over, and it heads towards my take profit, right? So it's very important to pay attention to liquidity. So because my order block was sitting below this this area of equal lows, that kind of adds more confluence to my order block, right? Because when I see that, I'm not going to be targeting something here for an entry, right? I'm going to say to myself, well, price is going to be drawn to clear this, right? It's going to be drawn to purge this liquidity that's resting here. And we have a clearly unmitigated order block sitting right below that zone. So very high probability that price is going to push through that liquidity, trade lower, mitigate the order block, and then from that point on, price has no more reason to trade lower than that, right? And if it does, then my analysis was wrong and I have to reassess the situation. But in my mind, price had no reason to trade lower than that, so I was comfortable setting my entry here and my stop loss just below this low right here, just to be safe, right? And again, as you can see, once price mitigated that zone, we took off with high momentum. And as price was taking off, can't remember, I think it was somewhere around here, I moved my stop loss to break even, and I took off 50% of the position size. So I secured profit somewhere around here, right? The reason for that, even though it didn't break structure just yet, I still secured profit here because I was like, 3 times my risk at that point, and it's a Friday. So I was just like, you know what? I'd like to bank some profit today, just to have some peace of mind, especially because I just took a 1 hour loss previously. I think it was somewhere around here. I can't even remember, to be honest. I took a 1 hour loss, so I just wanted to at least make that back and then some, right? So it covered my initial loss and then gave me a bit of profit on top of that. So then I know at that point, if price were to continue this move, for example, and then trigger my stop loss at break even, then I still would have actually recovered my loss and netted some profit for the day. So that would have been a fantastic outcome for a Friday just to end off the week, right? But that's not what happened here. After I secured profit and moved my stop loss to break even, we broke structure, or minor structure, right? Minor break of structure. Minor pullback, and then price took off once again, creating an actual break of structure, because this was the solidified high, solidified low. Price took off, creating that break of structure. And then it gets a little more hard to see here, but basically we have another solidified low here, a solidified high right here. Price took off again very impulsively, breaking that structure. So that's why I just map out these little annotations here, right? Break of structure, minor break of structure. It just helps me gauge the health of the current move, right? So because I'm seeing these breaks of structure to the upside, that confirms to me that bullish order flow is still intact. And again, as soon as I see a solidified low like this and then price breaks structure, this is now the point where my stop loss is going to get moved to. So instead of being at break even, I moved my stop loss to somewhere around here. And then once price created this high, this low, and broke through once again, I noticed it didn't hit my take profit and it started trickling down lower. As soon as I saw that, I said, okay, this is a solidified low. I moved my stop loss right here, okay? At that point, it was getting kind of late in the day too, so I was like, you know what? I have shit to do today, so I'm just gonna step away from the chart. If price wants to take out my stop loss, then I've still secured partial profit down here, and then the overall trade was sitting at about 4R. So can't complain about that. That's a wonderful outcome. But that's not what happened. Price never triggered my stop loss. Again, it was sitting right about here. Price came close a couple times, especially right here. It came pretty close. But it never actually triggered the stop loss. And then eventually it just crawled its way up to the take profit. And as soon as we cleared a little bit of liquidity from these highs here, I started trading back down again. This is not the price action I'd want to be involved in. There was no point in me holding the trade beyond that point, which is why I was happy to set my take profit level for here. So yeah, anyways, 6.13R with partial profits secured around the 50% mark. So yeah, pretty straightforward trade. Again, this is taught in the video course. This is taught in the ebook. Very simple. The order block was located on the 5-minute time frame, as I posted an analysis this morning, the analysis channel on the Discord. Just simply targeting this order block, the 50% equilibrium of that order block, triggered beautifully, barely any drawdown at all, and took off from there, eventually hitting the take profit for 6.13R. So that was a little trade recap. Hope you guys enjoyed it. Hope you guys took away something from it. And yeah, we'll talk soon. Have a good weekend, guys.
This highly profitable strategy makes you highly profitable trader. This strategy is based on supply and demand. This trading the indicator aids you when to buy, sell, and take profit. It is known buy and sell in green sine wheels chant. You can't get with the trend. This is not a luck, it's a winning strategy. Finally, 5 years of experience taught me which strategy works. You can't trade with the fear and emotion.